Hello everyone, welcome to EduTap and welcome to the Finance 360-degree session in which we cover the relevant and important finance current affairs and the RBI notifications, the RBI press releases which are important from your examination perspective. So today we are going to discuss a very important finance current affair. The Ministry of Finance has released the data for the public sector banks, and it is said that the public sector banks are having a resurgent force as the net profit has increased to a new level and the gross non-performing asset have decreased to a decade low. So we will discuss that what is this GNPA, what is this net profit, why it is said that the public sector banks are doing good now. So all of this we are going to discuss in today's session, and this is very important from your examination perspective. So let's start with the session, but before that, do subscribe to the YouTube channel of EduTap and do join our Telegram channel where you will get the PDF of the session. Okay, so starting with the first topic, the gross non-performing asset of the public sector bank. So first of all, see, the asset of a bank is the loan that the bank is giving, because on the loan that the bank is giving, the bank is earning the interest. The bank is earning the interest. So the loans are the asset of the bank because the bank earn interest on the loan. Now there are some borrowers that take the loan but they are not making the interest payments, let's say, or they are not returning the loan. So such loan are the non-performing loans. Such loan become non-performing loan or non-performing asset if the interest payments are not being made or the loan is not being repaid. So such loan becomes non-performing. So there are the gross non-performing asset of the public sector banks that have declined to a decade low of 3.12% at the end of September 2024. So the gross non-performing asset of the public sector banks have declined to a 10-year low. You can understand, from a peak of 14.58% in March 2018, the gross non-performing assets were at a peak of 14.58%. So the gross non-performing asset of the public sector bank were as high as 14.58%, which has gone down to 3.12% in September 2024, and this is a decade low. So that's why this percentage becomes very, very important. Okay. So I hope this is clear that what are the gross non-performing asset, and a loan is categorized or a asset is categorized as a non-performing asset if the interest payments are not being made for 90 days, for more than 90 days. Okay, or if the loan is not repaid or the loan payments are not being made for more than 90 days. So this is the idea of the data. I hope this is clear. Now coming to the next, that is, since 2015, the government implemented a comprehensive 4R strategy of recognizing the NPAs. So there is a decline that has been seen in the gross non-performing asset. So what can be the reason behind the decline in the gross non-performing asset? So one of the reason can be that since 2015, the government implemented a comprehensive 4R strategy. So what are the 4Rs? Recognizing the NPAs transparently to ensure accurate identification of stressed asset. So recognizing the NPAs, see what happens that sometimes there is evergreening of loans that is happening. Let's say I'm a borrower, Kritika. I'm a very big borrower of a bank. Now I have borrowed, let's say, 100 crores from the bank. Now I'm saying that I'm not able to return the money. So give me a new loan. I will make some profit. I have business. I will make some profit and I will return the money. So the bank is giving me a new loan of 200 crores to return my previous loan, and the 100 crores are for my business activity. So you can understand that I was not able to repay my earlier loan, and to to cover up this loan, the bank has provided me a new loan. So this is kind of evergreening of loans that is happening, and that is a wrong strategy or a wrong process that the RBI has said should not be happening. The evergreening of loans should not be happening. Okay, should not happen. So, and in this way, the 100 crore was returned, but actually this 100 crore should have been a NPA because I was not able to return the money. But because the bank gave me a new loan, I was able to return this 100 crore. So there should be a correct identification of NPAs, and the evergreening of loans should not be happening, and the NPA should be identified in the earliest of the manner. Because if I was not able to return 100 crores, what's the surety that I will return this 200 crores now, right? So recognizing the NPAs transparently to ensure accurate identification of stressed assets is very, very important, so that the stressed assets or the NPAs are identified at the earlier stages, so that the resolution can happen in a faster manner. Okay. Resolution and recovery of NPAs through targeted measures and legal frameworks. So not only recognizing the NPAs, but resolving and recovering the money is also very important. Okay. So that is what is required. Recapitalizing the PSBs. Recapitalizing the PSBs means that the public sector banks are under the authority, or the public sector banks, they are under the Government of India control, or the major shareholder is the Government of India. So the Government of India can provide the capital to the public sector banks. So recapitalizing the public sector banks to strengthen their financial position, so the Government of India can provide the capital to the public sector banks, so that they can continue their smooth operations. Okay. And can increase the lending capacity of the public sector banks for their smoother operations. Reforms in governance. So the governance has to be reformed, so that the governance of the banks is very good, the management of the bank is very good, and the operational practices to enhance efficiency and resilience. So there are reforms that were needed and that were done in the governance and the operational practices of the PSBs, of the public sector banks, to enhance their efficiency and resilience. So these were the 4 R's strategy that was adopted in since 2015, that recognizing the NPAs transparently to ensure accurate identification of stressed asset, reducing the evergreening of loans, or reducing the such kind of practices where the NPAs were tried to be hidden. Because if a bank has more NPAs, that bank is not considered very good in terms of its operational efficiency. So the banks usually try to hide their NPAs, but now the banks were told to recognize their NPAs in a very transparent manner, so that the recovery and resolution can happen in a faster manner also. And the government also helped by recapitalizing the public sector banks, and there were reforms that were also taken in the governance and the operational practices. Okay, so since 2015 the government implemented this comprehensive 4R strategy, and you need to remember the 4 R's: recognizing NPAs transparently, resolution and recovery, recapitalizing PSBs, and reforms in the financial system. So I hope this is very much clear. Now the next point is regarding the net profit. So the public sector banks in India have achieved a remarkable milestone by recording their highest ever aggregate net profit of 1.14 lakh crore in the financial year 2023-24. So that is the last financial year. In the last financial year, there was the highest ever recorded aggregate net profit of 1.41 lakh crore. That means in September 2024, we have seen the decade low of the gross non-performing asset, and in the previous financial year, we have seen the highest ever aggregate net profit by the public sector banks. So public sector banks, we can see that these financial data is showing us that the public sector banks are doing good now. Okay, so this is the idea, and now demonstrating continued momentum, they registered a net profit of 85,520 crores in the first half of the 2024-25. Okay, so in the first half of this financial year of 2024-25, there is a registered net profit of 85,520 crores. So you can understand that this is a very good net profit for the first half of the year. A robust 26% growth compared to the 67,850 crore during the same period last year. So during the same period, during the first half of the last financial year 2023-24, there was the net profit of 67,850 crores, while in the first half of 2024-25 there is the net profit of 85,520 crores. So by seeing the data first half, we can say that in this year maybe we will break, or the public sector banks will break the record of even the last year. So that is the good news, that now in this financial year maybe we will have the even higher aggregate net profit. Okay, so last year we have the data that there was the highest ever aggregate net profit of 1.41 lakh crore that was achieved by the public sector banks, and maybe this year there will be the breaking of the record of even last year. So the public sector banks are continuously doing good. Okay, so in addition to this stellar performance, the public sector banks have contributed significantly to their shareholder returns, because from the net profit or from the profit, the banks have to pay the corporate profit tax. They also have to keep some undistributed reserves or the retained earnings, so that they can continue their operations, they can expand also. So there are some retained earnings that is kept by the bank, and the rest is given as dividend to the shareholders. Okay, so from the profit there are the corporate profit tax that has to be paid, retained earnings that the bank has to keep, and there are the dividends that has to be paid to the shareholder. So in addition to the stellar performance, PSBs have contributed significantly to shareholder returns for the dividends, paying a total dividend of 61,964 crores over the past 3 years. So huge dividends have been paid to the shareholders also, okay, in the past 3 years. So now coming to the CRAR. So we have discussed about the GNPA. We have discussed about the net profit. Whenever we are discussing about the banks, the CRAR is another important measure that we have to discuss. Okay, another important data. So CRAR is your capital to risk weighted asset. See, the asset of a bank is the loan. Now all the loans that the bank is giving has some risk attached. Let's say that if the loan is given to a big business that has good credit rating, so the risk is maybe 20% risk weighted. So risk weight is 20%. Or let's say if a loan is given to a small business with a good or mediocre credit rating, so the risk weight is maybe 40%. So different loans have different risk weight attached. Okay, so as per the risk weighted asset of the bank, the capital has to be maintained by the banks also. Okay, so let's see the data for the CRAR, that is the capital that the bank has to keep against the risk weighted asset of the bank. Okay, so another indicator of the improved resilience of the public sector bank is their capital to risk weighted asset ratio, that is CRAR, which rose to 15.43%. That means against the risk weighted asset of, let's say, 100 is the risk weighted asset, the banks are maintaining the capital of 15.43. Okay, so the capital that the banks are maintaining with themselves against their risk weighted asset is a very good percentage, is a very good number. So the CRAR has increased to 15.43%. that is a very good percentage, that is a very good number. In September 2024, CRAR has rose to 15.43%, up from 11.45% in March 2015. Okay, so that is a very good improvement in the CRAR that the public sector banks have seen. Notably, this CRAR far exceeds the RBI's minimum requirement of 11.5%. So CRAR requirement is 9%, plus there is some buffers, capital conservation buffer, that is 2.5%. So in total, the capital that has to be maintained with the bank is 11.5%. So you can understand that the CRAR that the public sector banks are maintaining has risen to 15.43%. That is way higher than this 11.5%. So the RBI's minimum CRAR requirement that the RBI has said is 11.5% for the banks, but the public sector banks are maintaining 15.43%. That is a very good percentage, underscoring the strengthened financial health of these institutions. Okay, so the more the CRAR, the more the capital the banks are keeping with themselves, so they have more strength to fight against the distress kind of situation. Okay, so this substantial improvement not only highlights the renewed stability and robustness of the India's banking sector, but also position PSBs to better support economic growth. So it shows that the public sector banks are maintaining good capital with themselves, so they will be able to handle the distress kind of situation, and it shows the stability and robustness of the India's banking sector. So now we have discussed about the GNPA that has decreased to a decade low of 3.12%, and we have discussed about the net profits that have improved, and in the last financial year there was highest noted aggregate net profit. Then we have discussed about the CRAR also. Now strengthening the PSBs through EAS framework. So what is this EAS framework? Okay, so the government has implemented a series of measures to enhance the financial condition of the public sector banks through the enhanced access and service excellence, okay, framework. So this is the framework, that is the EAS framework, enhanced access of the banks and service excellence that the banks have to provide. So that is the EAS framework. So in the EAS framework, this framework institutionalizes an objective process of incremental reforms aligned with the evolving banking ecosystem. So with the evolving banking ecosystem, with the improving and ever-changing banking ecosystem, there is the incremental reforms that are required, focusing on governance, prudent lending, risk management, technology and data-driven banking, and outcome-centric human resources. Okay, so I hope this is very much clear. So the EAS framework has been adopted by the public sector banks, and this is the EAS framework that the government has implemented. So now in the EAS framework, there are key highlights of these are the key highlights of the steps taken under the EAS framework to strengthen the financial condition of the public sector banks. So prudential lending. So PSBs, the public sector banks, are now systematically monitoring the adherence to the risk-based pricing. So risk-based pricing means the higher the risk, the more interest is charged or the more price there will be, right? So risk-based pricing is a method used by lenders to determine the interest rate and other loan terms and conditions based on the borrower's credit worthiness. If you have a very good credit rating, if you have a very high credit rating, that means you are less risky. That means less interest rate can be charged. But if a person has less credit rating or has less credit worthiness, that means the person is very risky and more interest has to be charged. Okay, so PSBs are now systematically monitoring the adherence to the risk-based pricing and have established data-driven risk scoring mechanism so that risk scores can be seen and can be utilized. The credit rating can be utilized for the better risk-based pricing, for the appraisal of high value loans also, and factoring the group entities, because let's say that I have some business and that is a part of a group. Okay, that is a part of the group business. Now the group business is not doing well, so the group wants to take loan in my business name, and that will be utilized by the other subsidiaries. The money will be utilized by other subsidiaries or by the other group entities. So if the group entities are not doing well, so that should reduce the credit worthiness of this entity also, because it is connected to this group. So if anything happens to the group entities, so that will anyhow affect the entity that is connected with the group. Okay, so that's why it has to be taken into account when the group is there, when there is a group. Like if there is any problem that comes in any of the Ambani companies, okay, Reliance Industry is there, the Reliance Telecom, Reliance Power, Reliance Infra. So if any one group entity is being included in a very bad kind of system, like there is rumors that are going on regarding a particular company that okay, that company has done something wrong, so all the other companies will also be affected, their stock prices and such will also be affected. Okay, and you can understand that they will also have some repercussions. So in this manner, the group entities, the condition of the group entities should also be taken into account. Okay, so this is the idea. So PSBs are now systematically monitoring adherence to the risk-based pricing and have established data-driven risk scoring mechanism for appraisal of high-value loans, factoring in group entities also. ID-based early warning system. So these system uses third-party data, the data from the other entities like the text data and such, to enable timely and proactive action in stressed accounts. Because let's say you are paying a huge taxes before. Now your tax payments are reducing. That means the business activities that you were doing are reducing. Your business that you were doing, the trade that you were doing, the production that you were doing is reducing. That's why you are paying less taxes, you are making less profit. So the third party data can be used in a timely and proactive manner to see the stressed accounts, that what is the problem that is coming. Okay, so that is the idea. So now coming to the next point, that is stressed asset management verticals. So dedicated units have been set up for focused slippage prevention. See what happens, that when we talk about NPAs, that the asset has become non-performing, that is the loan or the interest is not being paid for past more than 90 days, that means in the first 30 days, in the first 60 days, or in the first 90 days, there can be the recognition of the accounts that okay, this account can become NPA. So SMA 0, that is special mention account 0, is the account where the principal or the interest payments or any other amount wholly or partly is overdue up to 30 days. Or SMA 1 is the special mention account 1, where the principal or the interest payments are overdue partly or wholly for more than 30 days up to 90 days. SMA 2 is your special mention account 2, where the principal or the interest are overdue for more than 60 days and up to 90 days. And when more than 90 days, if there is the overdue payments for more than 90 days, then it becomes NPA. So that means before slipping into NPA, there is the recognition that can happen that okay, the payments have not been made for 30 days, for 60 days. And at that time, in the initial phase only, the contact can happen to the customer that why is it happening, why you are not paying. If it is a problem, if it is a genuine problem, the bank can allocate some time, the bank can make the payments lesser or such, or the bank can like take action against that. Okay, so dedicated units have been set up for focused slippage prevention. Slippage prevention means that the asset should not slip into non-performing asset. For that, there is the focused action is required, and in the initial phases only, the steps have to be taken by the bank, for which dedicated units have been set up. Recovery in large value asset loans. So dedicated units have been set up for focused slippage prevention, so that these special mention account do not slip into NPA, and recovery should happen in the large value stressed loans, resulting in a sharp decline in such loans. So with the dedicated units, there is a sharp decline that has happened in such loans. Tech-enabled smart banking. So the adoption of retail and MSME loan management systems has reduced loan turnaround times. Loan turnaround times means that the end-to-end process for the loan has become faster. Okay, that the contracts being made, the signs being happening, so all of that is happening faster. So with the adoption of retail and MSME loan management system, it has reduced the loan turnaround time, or it has reduced the end-to-end time that is required for the loan process to complete. Additionally, there are platforms like the one-time settlement and the EB-Grade platform. So EB-Grade, it was launched in December 2019. This is an auction e-auction, electronic auction platform to enable online auction of attached asset by bank. So the loans, whenever the bank is giving the loan, the bank is also taking the collateral. In general cases, the bank is taking collateral. Collateral can be in the form of land or house or any property and such. Okay, so if the loan is not coming back, so the bank can sell the collateral, the bank can sell the land or the property. For that, there is a EB-Grade platform that has been launched, that is an e-auction, electronic auction platform to enable the online auction of the attached asset by the bank, so that the asset or the collateral can be sold at a good price. Okay, so this is a single platform that has been developed so that the auction can happen in a smooth manner. Okay, now this is the first question. I hope you will be easily able to answer this question. You have to tell the correct statement. Okay, so try to answer this question. Now this is the second question. This is another homework question that I hope you will be able to answer. Now before ending the session, if you go to the EduTap's website, you can go to the free material here in the block section, you can know about the examination. Okay, if you want to know about a particular exam, that is, let's say RBI Grade B or any examination, SEBI Grade A, NABARD Grade A, if you want to know about any of the exam, you can know more about the examination. You can have the information about the exam through this free blocks. Okay, so here the exam information is provided about the examination. There is strategy that you can get for the examination, or you can even get the success stories, that how the toppers achieved their dream. Okay, so you can even read the success stories for the examination that you want to prepare for. So this is the block section that is prepared at free of cost, and this is provided to you at free of cost so that you can know more about the exam, you can have greater idea about the exam. If you go to the main page, there are the courses section where the courses have been displayed to you so that you can know about the courses, that what all is being provided in the course and what all you can get through the course. Okay, so all of that is mentioned here, that what you will be getting and what is being provided and who all will be teaching. So you can see that also. Okay, so this is it for today. Give the right answer of both the question, and thank you very much for attending the session. See you in the next session. Thank you everyone. Thank you for attending.